Hello, my name is Daniel. Today I wanted to look at Sylvamo, which is a spin-off from International Paper. It grabbed my attention by trading at quite low valuations. It being a spin-off in itself already interests me, but valuation this has been trading at added to that. So I want to get into it. What do they actually do? Why were they spun off? And perhaps is there an interesting investment case? So what does Sylvamo actually do? Sylvamo is a copy and printer paper company. They mostly operate provide three types of paper: commercial printing paper, converting paper, or four types: printer paper, commercial printing paper, converting paper for envelopes and stuff like that, specialty papers like for paper bags and paper for inside of food items like lollipops, stuff like that. These are the most recent news distributions for a year I could find. Although the 2021 one I have an updated version later on this slide, but this is essentially a quick snapshot of the business. They operated mostly in North America. Almost are fully dependent on uncoated freesheet papers. They have a market cap of about 2 billion, 2.6 billion enterprise value, at least at the time of making this analysis. And this is in general a very quick overlook of the company. And why would this be interesting? Why did International Paper spin this off? Well, they didn't really want a lot of exposure to uncoated freesheet printing paper anymore, and Sylvamo in itself provides an interesting case as it's one of the biggest uncoated freesheet suppliers worldwide. They, in almost all regions they operate in, they are in the top 3 in all regions they have production sites in. They also operate in Asia, but they're a bit smaller. Also, as can be seen by them not specifically mentioning it in their competitive position slides. At least this is from the prospectus from the spin-off. This is also from that prospectus, as Sylvamo is a very low-cost producer. They have, however, divested one of their lower-cost mills, the Svetogorsk mill in Russia, due to the war there, and they have bought a new mill in Sweden recently, which is not on this cost or supply cost or cost per mill section. So they are mostly quite low-cost mills, and that's something to keep in mind. Although they're larger, they also have a mill that's quite high cost on this scale, but they are trying to bring costs down in the Latin American region. So how do I get to the notion that this company trades as an interesting valuation? Well, they have growing sales, they have growing EBITDA, free cash flow is a bit wonky due to a lot of items like the divestment in Russia. Then here they adjusted everything for the Russia divestiture, as that had quite a large impact, as we'll get to later. But it's trading at very low multiples. I believe a PE around 5-ish, in the 5-ish range, depending if you take forward trailing or your own estimates. And it's still growing, at least on an adjusted basis, but we'll have to take a look at that later when I present the actual numbers. So that's something that caught my attention. This very generally like a company generating, this would translate into like 300 million in profit, net profit, on a market cap of 2 billion. That's quite a lot. So that's what initially interested me. Yeah, 300 in the previous year. In 2022 was a bit lower due to the discontinued operation item that is fully related to the Russia divestiture. So if they take their adjusted where they adjust for this, and then they come back to this 300 million figure. But if we just look at continuing operations, we are seeing quite some growth, which is interesting to see. Even this is before they made the acquisition in Sweden. So that's something interesting to note, as that's not something you would expect from a company trading at such a multiple. They are also trying to reduce debt a lot, and there's also interest expenses. 2022 is the first full year that they're actually independent companies, so now they're actually having to pay a lot of interest as they aren't part of international paper anymore. But they're trying to reduce the debt load, or trying. They actually reduced it quite a bit, but we'll get into that later. They also have been buying back some shares, around 5% of market cap or outstanding shares, so that's something worthy of noting, especially as they also pay a dividend on top of this, which they have increased since spin. The debt. So this company, when it was spun off, it got quite some debt with it, 1.5 billion in debt. That is quite a lot for a company only worth 2 billion, or at the time it was worth a lot less than it currently is, but that's a lot. But they have managed to reduce that by about a third, mostly paying down term loan B. So that's something interesting to note. They are also currently still actively working on this debt. They don't have any near-term maturities that are super large. 2027 will be an interesting year, but they'll probably roll debts before that happens. And until then, they only have small debt maturities, so that's nothing that would concern me, especially with given their free cash flows, that they could pay down most of this debt in like 3 years. So that's I do not have any large concerns regarding the debt coverage. And this is the acquisition I was talking about. This is the main talking point with Sylvamo throughout the last half year. They made a very interesting acquisition of the Nymolla mill in Sweden for around $60 million. It just had completed a $40 million modernization project to create increase capacity by 50 of softwood softwood pulp, and or the use of softwood, which reduces costs as they don't have to use hardwood, and that also increases capacity. Now currently stands up 500,000 metric tons. Becoming one of the larger mills, although not the largest, but definitely one of the larger mills. And it's already to contribute about $15 to $20 million in EBITDA in the first quarter of 2023 alone. So they noted an $8 million annual earnings benefit. If you would extrapolate that, you would get to quite a decent earnings multiple, or even EBITDA multiple of 80 million, or depending how you look at it, say 80 million EBITDA a year, and that would only take 2 years for the full EBITDA to be paid back. So about 2 or 3 times EBITDA, which is quite a decent price to pay for a mill, especially if they can keep generating very decent profits from that. It also diversified them a bit, increasing their European exposure. Latin America exposure will also be increased, not necessarily through this acquisition, but this is what they expect for the uncoated freesheet section. So, capacity-wise, to be more diversified. And all this feeds into a very interesting outlook, as this company is just producing a lot of cash flow. It's also a cash flow story as presented by management. They expect 2023 to be quite cash flow heavy. That is one of the catches, because it's a very cheaply of company trading at a very cheap valuation. So there has to be a catch. Well, they have 2 main issues: a lot of maintenance in the next year, But yeah, as management said, they're investing. The maintenance has to be done at some point, and they're also investing in additional capex to reduce long-term costs. As they note that International Paper has really underinvested in the business, and for long-term prospects, they have to invest more now. For example, in Brazil, they said they were investing about 30 to 40 million in additional forestry, which will benefit them in approximately from 8 years onwards. So that's something important to note, that management is indeed looking at this company on a long-term basis. If they manage to keep up cash flows like this and perhaps even increase them, this will be an amazing investment, but we still have to see any actual increases after any special items. Another special item would be the Brazilian tax dispute. They're not allowed to pay out a lot of dividends or buy back a lot of shares as long as this is in place. They need to pay up to at most 120 million in that dispute, depending on the outcome, and anything above that, or that's their share in International Paper, would have to pay. So the maximum exposure from this dispute is 120 million. But we'll still have to see in which year that comes in. So valuation-wise, if I look at it and take into account debt, and I just subtracted the tax dispute or added it onto debt, then I get to an internal rate of return around 14 to 15%, depending on the share price you're currently looking at. And that's based on these numbers. I expect quite some revenue standstill over the next couple of years, even though they have shown they can grow revenue at quite a rate. We're growing at 3 to 2%, which is even under inflation currently, even though they operate in higher growth regions like Brazil, where they actually saw double-digit growth in demand. EBITDA, I took their guidance for 2023 at heart, but after that I didn't really write down any growth, even 0% in 2025, 2.5% in the other years. These are personal estimates, so I'm not an accredited analyst, so this is my personal investment thesis. Net income, I do not expect that to grow a lot after next year. That very low growth, and actually even zero growth in 2025, because they're now doing a lot of maintenance, but I have my doubts about the underlying margins. If they can keep up margins like this, if the underlying market trends remain like they were, because this is not a high growth segment. It might even slow down a lot. So that's something to keep in mind. Cash flows, I also did some forecasts. Essentially, 2023 will be a bit of a bump in comparison to 2022, but after that, I do not really expect any increases. But even taking into account that no growth after 2023, or essentially no growth, you still end up with very high free cash flow numbers or net income numbers. This is on a market cap of 2 billion. Keep that in mind. So that it would gain back almost all of its market cap in just 5 years, that will lead you to an internal rate of return of 15% if they manage to do this, of course, that is. But so far, management has proven to actually be quite prudent. So, in my opinion, this stock is quite interesting and presents a very, very good investment case, at least in comparison to the risk, as this is not a super cyclical business, or they're reducing leverage, so the risk from leverage is also decreasing, and management is taking a long-term outlook or long-term perspective. So that's something I find, that's all points that I want in a company. So in my opinion, this is a very interesting investment at the moment. But I always will recommend to do your own research into the company. There's quite a bit of information out there to be found on this company. And if you have any questions, just feel free to ask me in the comments. See you next time.